Welcome to Investors Insights. Our topic today is please take a trip. I am joined by my colleagues, Trey Booth, Bobby Norman, Adam Van Zant, and Ty Miller. And we've got some topics today that I think you will find very beneficial as you watch the economy, the markets, and also your portfolio. Why please take a trip? Did we select that? It's because throughout our blogs, we've been talking about the leisure and entertainment industry and the impact it could have if the consumer moves over to services and travel and entertainment. And we're going to elaborate on that. We're also going to elaborate on market rebounds or what happens to a market in this kind of volatility in the first 100 days. We're going to give you index numbers to follow in relation to this volatility. And we're also going to look at what corporate insiders are doing right now. Some great insight from this team. So with that, Trey, I want to start with you because you brought up about jobs and the leisure and entertainment industry. And why has that been so important to us?
Definitely. So we've been watching the jobs numbers all year because, to your point, we've been talking since really late 2020 that the U.S. consumer has been spending more on goods versus services. And to see inflation come down, we need the consumer to flip back to spending on services like they have done for the last 50 years. The U.S. consumer is 70% of our economy, and services is over 70% of the consumption. So it's a very large and important part. And now that we're hitting the mass travel season of the summer, we should see people starting to spend more on services, and that should be very helpful to inflation. And where we'd see that first is in the jobs numbers. So on Friday, we saw the jobs come out from the Labor Department. We saw 390,000 jobs created. Now, that's a good top line number. 62.3% participation rate, that's up. That's another good top line number. But under the hood is really where we wanted to focus. And we saw leisure and hospitality lead the jobs gains with 84,000 new jobs. That's a large percentage of 390,000 jobs created. And that's what we need to see, because you can see on this chart, that's where the slack is. The economy is definitely running tight, running hot with inflation rising. So where can we grow without causing inflation? Where the slack is. You can see on this chart that leisure and hospitality has 1,345,000 jobs less now than they had in February of 2020. So there's a lot of slack there, a lot of area for our economy to grow in that region. And that's going to happen in these months, the summer months, where really consumer spending is heavily on travel, leisure, hospitality. That's why we say, go out there, take a trip, go out to dinner, spend your money on services. Don't buy another at-home office or another iPhone. You know, not saying don't buy iPhones, but try and spend some on hospitality, spend on your neighborhood restaurants, trying to keep the local economies going. I think that's what we really need to see for the U.S. economy to continue to expand without putting more fuel on the inflation fire.
Yeah, and we've been saying that for some time, and it also adds to our debate that we're having right now in our analysis about how this inflation may change as we see people go in that direction. It could be the economy's just trying to get back to the normal way we did things prior to COVID. Bobby, you brought up a great topic. We're big on history here at Five Plan Partners, and you've got some historical data that falls right in line with what we're seeing currently right now. So talk about that in relation to the markets.
Yeah, we continue to look at historical periods when the market started the year off trading down, and we recently passed 100 trading days for the year. So after 100 trading days this year, the market has had the worst start to the year since 1970. In fact, it was the fourth worst start to the year ever after 100 trading days. So we look back in the market history to see where the market might go from here. As always, no guarantees. But as you can see in this chart, looking back at the 5 previous worst starts of the year, the previous bad start saw really strong returns in the second half of the year. We referenced 1970 a few weeks ago because of the similar market conditions as this year. And as you can see in the chart here, the market was down 23.7% after the first 100 trading days in 1970, but then rallied 31% in the second half of the year. So with a lot of negative headlines being talked about every day, whether it's inflation, Federal Reserve raising rates, concerning consumer sentiment, midterm election year uncertainty. Looking back at history, we like how the market has recovered previously after rough starts to the year with similar negative headlines.
Yeah, I think that's great insight and really complements what Trey was saying as well. A lot of positives here as we start to go into the summer, or as I like to to say behind the scenes, what's the information, the data, the research that could let us see down the road. And Ty, you gave us a great one as well today on corporate insiders. It's always fascinating to see what they're doing with their money. And so elaborate on that and how that complements Bobby and Trey on their information.
Yeah. So with the average stock down about 20%, we're starting to see corporate management buy back their stock. Why is this important? Well, corporate management can sell their stock for a number of reasons. They might need the money for liquidity. They may have, they may be buying something. They may just want to diversify, but they only buy for one reason. They think their stock's going higher. So
right.
It's important that we're starting to see them buy back their stock again. And they actually have a pretty good track record, as you can see in this chart, of this is a ratio of sellers to buyers. And they peak at times when the market is at its highest, and they kind of bottom when the market's at its lowest. As you can see here, 2008, 2009, not many sellers out there, but late last in 2020, beginning of 2021, you started to see some more sellers take profits. So they got a pretty good track record, and I think it's something that we need to keep an eye on as it starts to turn in favor of the buyers.
Yeah, we will watch that closely. Here at Five Pine Partners, we look at that corporate insider trading as well as technical and fundamental analysis, looking at it from all aspects. And Adam, you're on the technical analysis side. You always bring some great numbers, folks. Grab your pen and paper there or type this in your phone. But these are some numbers you need to watch as the week progresses on support and resistant levels. So Adam, go ahead.
Yeah, so you heard Trey talk a little bit about how important the consumer is. So as important as that is, we like to put some numbers to it in the markets. And as the markets are trying to find its footing, the S&P Friday close came in at 4,108. New resistance level of 4,140 with a new support level of 4,070. We also heard Bobby talk about how we moved over the 100-day trading for the year. So the year-to-date moving day average for the S&P 500 is currently sitting at 4,356. We think that's a really important number to look at, especially stretching out to the end of the year, as we've mentioned in previous vlogs, that this could potentially become our long-term resistance level. So that's one number we really want to focus on.
That's a key number there. So Adam, thank you for sharing that. And with that, folks, all this information we continue to share on social media, on Facebook, Twitter, LinkedIn, and YouTube. Also our podcast, please take time to listen to that. We want to provide you a lot of information so that we're watching your portfolio in relation to your financial blueprint. And we're big believers that knowledge can help bring down anxiety and fear if you know what's going on in the markets. Every day here at Five Plan Partners, we strive to make our clients' lives better, richer, fuller. And through these vlogs, it's just one of the ways we communicate with you. We hope you have a great week as we continue on in the month of June. And for the summer, please take a trip. Thanks.